Welcome to Charts Today. My name is David Linton, and today's edition for Thursday, the 15th of June, comes to you from Prague, where I'm at an energy trading conference. And the Federal Reserve rose interest rates by a quarter of a percent last night, so that's had an interesting effect on markets. And we start by looking at the currencies, and we see that the US dollar, this is the dollar index, the US dollar fell very sharply on that announcement. And then rose again. So we're seeing we had a fall away just before the announcement, and then we've recovered. We're still bearish on the dollar in the short term, and these downside targets are activated. But interestingly, we haven't managed to activate this new target that we saw as a result of that announcement. So we are just seeing bearish action still on the dollar, but the bullish position still remains long term, and it'll be interesting to see how the market digests this rise over the coming days. And if we look at the euro, we see something in reverse. So the euro jumped ahead of the announcement and on the announcement, and then we saw the fall away, and again then we saw that reaction. So interestingly, this has taken us bearish on the euro short term. And we're seeing that we're in this very flat range, just really hitting real resistance here. So it will be very interesting indeed to watch the euro over the coming weeks. Can it break this consolidation and go higher, or is this a turning point? And we'll just have to watch and see. The Japanese yen, we're seeing the dollar recovering here as well, but still bearish on all three time frames. So the yen is still the strong currency. Sterling, marginally affected, just fell away a little bit, and actually against the euro a slight rise. So we're just seeing that sterling is still pretty bearish medium and long term, but yesterday the euro is the one to fall. Swiss franc, we're seeing sterling as well, just recovering slightly here, but is bearish in the medium and short term. And against the Australian dollar, it's bearish in the short term, and the long term, just the medium term, just coming and testing support at the moment, which might turn it bearish. US stock markets were mute, really. There was no big reaction to the news. It was just this sideways reaction. So normally, historically, when interest rates go up, stock markets fall. Investors see, in real terms, potentially reduced returns, but we didn't see that yesterday with the S&P, so that does show us some resilience in the market. The Nasdaq, interestingly, we've got this situation where we had this fall on Friday, recovery, but we're not really full recovery. We're watching this low. If we break through this low, we'll see a further sell-off in the Nasdaq probably. So whilst we're bullish medium and long term, just need to be aware that that level about 56.65, let's say 56.60, through that level we would start to potentially fall further. So we just need to watch that. Dow Jones bullish in all three time frames, continuing another new high yesterday. So we're seeing blue chips in the US doing well, and the Russell 2000. It wasn't strong yesterday, but we are just seeing it's holding up. So US market's looking pretty good. The S&P future is looking bullish still, but the real worry is the Nasdaq E-mini. That is trading about 1% lower this morning, so it is suggesting that we will see a further sell-off in tech stocks. So we just need to be aware of that US tech is starting to look a little bit worrying. The FTSE 100 is down quite substantially this morning, down nearly 0.75%, bearish in the short term. The medium and long term trends are intact, but this is a pretty sharp sell-off this morning. And the FTSE 250, again, we're seeing that as well. So that's not quite as bearish, but we are just seeing that sell-off. And the DAX is down 0.5% too. The Nikkei below its cloud on the short term, so we're just seeing a sell-off there. And the Hang Seng also below the cloud short term. Shanghai, bucking the trend, is holding its position on the long-term chart. The Indian market down 0.25%, so just starting to shift through the cloud. And the Australian market, whilst we've seen a short-term recovery, is down 1.2% this morning, so that's quite significant as well. Commodities, Brent crude. I was talking yesterday at the conference saying that I expect to see Brent falling into the $30 level, the 30s, I should say, and coming back to test this low that we saw at the beginning of 2016. We're now moving lower than the low we saw in May. Lower lows are bad, remember, so this is looking pretty bad for crude oil. WTI, much the same thing, so we're seeing here a move below on the cloud as well. US nat gas is just falling again, and we're expecting moves into the 280s, so further to fall. It's up 0.2% at the moment, but we do expect to see that going lower as well. Copper is down quite a bit as well, bearish in the short and medium term. If we take a look at coffee, bearish on all three time frames. So we are just seeing sell-offs here. Sugar testing new lows again, bearish on all three time frames. So soft commodities generally looking quite bad. Gold has been quite volatile in the last couple of trading sessions. We had this move up through the cloud on the price, not quite on the lagging line. We're back below the cloud, so we're just seeing that short-term sell-off. No clear downside targets on gold. Interestingly, every time we create a new set of columns, we effectively move across, which is moving us out of that downtrend and into the uptrend. So we are just seeing gold looking quite bullish. Silver, similar picture, but not quite as bullish on the medium-term chart. And we haven't broken these downtrends on silver yet. Taking a look at the US Treasury yield, sitting at 2.13%, so not really pricing in further rate rises really at the moment. The minutes of the Fed will be the key for that, seeing what the sentiment is. But interestingly, we are bearish medium and short term on rates, even though prices have gone up. Looking at Apple, recovery it's finding support on the cloud here on the medium-term chart and the price, but the recovery is still underway and not really a strong V-shaped recovery. We're just teetering along the bottom. Google, again, most tech stocks just falling away a little bit yesterday at the end of trading. Facebook, again, these lows on all these tech stocks are what's vulnerable. We need to just keep an eye out that these recent lows are just a buying opportunity and not the beginning of something more sinister. And Microsoft is holding up relatively strongly versus the other. So the big moves really are that tech is just in the doldrums at the moment, selling off. So we need to just be aware that those levels are quite key. That's it today. Tomorrow we'll be coming to you back in London. Until then, happy charting. See you then.